Just
We're live. I don't know when it goes live. Welcome everybody. Wednesday, 3:30 p.m. Central, joined by the wonderful Alexandra and Gary. Thank you both very much for joining me today. Gary's got his vacation look on. He's on vacation and he's looking spiffy. I like it. And Alexandra looking beautiful as ever. Thank you both very much for joining me today. Lots to talk about, obviously, in the world of Tesla, in the world of Elon Musk. Delivery production report just came out on Monday, January 2nd. I'm sure everybody wants to hear everybody's thoughts on that. And there's a lot of different things as well. These usually we have a rough guideline and then the conversation goes as we've done it before. And then God knows what comes up for the next 60 to 90 minutes. So maybe what we'll do is we'll throw it over to Gary first. Gary, if you didn't catch him, he was on CNBC earlier today. The dude's freaking making the rounds on TV. He looks so good on there. And I would love for you to kind of catch us up on your thoughts, Gary, your thoughts on Tesla's Q4, what you're thinking about from an earnings perspective. And then, Alexandra, you can go next, and then we'll turn it to a conversation. So, Gary, take us away.
Okay, so obviously the fourth quarter numbers missed. That's why the stock went down 12% yesterday. I think we're probably forming a bottom, somewhere in the 105 area because it just becomes so cheap. And you get institutions who probably have never owned Tesla before saying, wow, at 21 times consensus earnings for next year, which is just a couple points above S&P, I could get even 30% growth, not 50, but 30, because those are the consensus numbers. The stock looks pretty good. I would say with the volume miss, that's 2 quarters in a row they missed because of China, both times. We saw the weekly insured number units come out last night. They were terrible. It was 4,000 for the week. So if you look at for December, it was 48,000, which is the lowest last month of the quarter this year. Now, for the whole quarter, it was okay, but I think it's going to make people, even more worried about China, and it's going to increase the pressure for Tesla to come up with a lower price car, whether it's a $25,000 car. I don't care what it's going to be, but it's got to be something that goes to the heart of where BYD competes, which is that under $30,000 segment. And so, where we are now is the lowest multiple we've ever seen on Tesla. It's 21 times. The lowest before was 28 times back in 2019. And I think at this point, when I look at the catalyst going forward, I still have Cybertruck. I still have, some progress on the cheaper car. We still think there's going to be a buyback now more than ever. At some point, Elon's going to choose a CEO of Twitter. That'll be a catalyst. And so we're sticking with the stock. If you didn't see Alexandra's column from today, we bought more yesterday, about 105. And it's, again, our largest position. We were kind of waiting. We let it fall, passively because we just didn't, you don't want to catch a falling knife, but we didn't know when the bad news is going to be done. I think the bad news is kind of done. We have earnings in a couple of weeks. We're about where consensus is. Consensus is $1.16. Non-GAAP, we're at about $1.18, $1.20, depending on, how we think about the energy storage business. We'll talk about that later. But I don't think the earnings themselves are going to matter all that much. I think it's going to be the gross margin, which, ex-reg credits is about 27 because they had to take a hit because they discounted in the fourth quarter. So that probably is not going to be a great number. And more importantly, people are going to want to know what's going to happen going forward. How are they thinking about the year? How are they thinking about volume? And again, when Elon talks about recession, that's something that's different from other people. Other people think it's going to be a shallow recession. So when he starts saying, okay, the numbers are going to be really bad because of recession, you don't know exactly if that's apples to apples with the way everybody else is thinking. So let me stop there.
yeah, you're packing it all in there. My gosh, I had my 7 points and you just bunkered through.
3 of them.
Hi, Gary. Hi, Gary. Good to see you on vacation. Come back soon. So a couple of things. Well, congratulations on buying yesterday at 105. That was obviously the right moment. And if I saw it right, you did it selling all your Rivian position to increase your Tesla, right?
Yeah, what we realized is Rivian just tracks Tesla. Tesla, is its own animal, if you ask me. It acts like a tech stock. It tends to follow the high quality tech names, but obviously it's got its own unique set of fundamentals. So it doesn't behave exactly like tech stock. Fourth quarter is a perfect example where Tesla was down 55% and NASDAQ was flat. But Rivian, what we found is it really does just follow Tesla. And so we just figured Tesla's just too cheap right now. Tesla makes money. Tesla's high quality. And so we had a small position in Rivian. It was less than 1%. We just took it and we put it into Tesla yesterday.
Good. So Tesla back to number one position, and you got a, don't remember, 2% position in BYD, right? Those are the only two
Correct.
EVs that you can. But I mean, the Harley you can probably have now as a mixed EV story as well soon, right?
I guess. I mean, you could look at Harley as being we're playing because of the electric bike business, but it's still very small. BYD is a great stock if you can stomach that they have very low margins, but those margins will grow over time. Those China numbers that they're putting up every single month, and again, this week, the numbers that they put up last night were huge. And
Yeah.
so they're getting a ton of what I'll call China EV share. Obviously, they have plug-ins, plus they have BEVs. But even just the BEV business is booming. So I like the stock a lot, and the margins will go up. The margins are single digit, as everybody knows, but they'll get higher as they continue to get more scale.
Well, low single digits. Okay, fine. So that's on BYD. Now on deliveries, why are you so skeptical on demand? Because I mean, fair enough. There are 35,000 still on ships somewhere in the seas in the world, and maybe if we believe Troy, another same amount in inventory waiting to be allocated. Is that really so much of a problem? Because, I mean, this is more or less 5% of the yearly numbers. Having 5%, half of it on ships and half of it in the worst case scenario, sitting in inventory, meaning 2 weeks of stock. I mean, what makes everybody so worried about demand problem? End of October, 2 months ago, we still heard that for the foreseeable future, we are selling any car that we're producing. What happened in those 2 months?
I think it's the fear of the unknown. And as you know, with Tesla, they're in their quiet period. They're not going to talk until earnings. They're not going to talk to me. They're not going to talk to the analysts. And so and I've said this before on Twitter, when you have a CEO say, well, we see these severe recessionary winds, it just makes people nervous. And particularly what happened in the fourth quarter, that he is seeing something that the rest of us are not seeing. And it could be, and look, I've talked to other bulls about this. It could be that there's some demand issue. The brand may have taken a hit because of all the noise. I don't see that. I don't hear about it anecdotally that people are canceling their orders because they saw some tweet, some right-wing tweet. But I don't see it. But it would be helpful to see some marketing numbers, net promoter scores, brand intent, customer loyalty. These are basic things that every company buys. They buy marketing research, and they should be available to us so that we can see if the brand's actually taking a hit. Like I said, and I want to stress this, I don't see it, but there are clearly people who are selling the stock because of the unknown. When you look at the street numbers, they don't buy into the 50% story. They're barely buying into a 30% story right now. I look today, and this is what drives stock prices with growth stocks, is earnings and cash flows. So when you see that the 2023 numbers are down 4% since the volumes came out, and they're down about 17% over the last month, that's clearly fueling people to sell the stock, right? Because earnings come down, that affects price targets, buy-side price targets. So if a PM is managing money, they have a price target in their mind, and it's based on something. It's based on earnings or cash flows. They don't just pull it out of thin air like the sell side does. So somehow there's got to be a change in the trajectory of earnings for 2023 and beyond. And what will cause it to change will be more confidence about Cybertruck, more confidence about we'll call it the compact vehicle, whatever it's going to cost, and more proof that the brand has not been affected by all this noise over the last 6 months. Which again, I want to stress, I don't believe that's the case, but I know other people do.
I understand. And do you have the feeling they set up this IR day? Because, I mean, this is so untypical, right? Since they stopped PR, they'd never done an IR day. It was a product day or whatever, but it was never an IR day. So it was clearly labeled not an IR day. So now, for the first time since mid-2019, they're setting up an IR day. Is this damage control? Is this we are trying to be better communicators, which makes my heart pump, right? I mean, I'm like, wow, good, here we go. So what's your feeling on this?
And if I can give some context here real quick, this is the investor day that's going to be on March 1st, coming up in a few weeks. Yeah, go ahead, Gary.
Mm-hmm.
So my experience with these type events, IR days, is when they have something, I don't want to call it newsworthy, but something to say, something they feel is important. And again, you've got a lot of events happening. You got Cybertruck, you got the cheaper vehicle, which for many reasons they may not announce until they're closer to, actually launching it. But I do think it's probably so they can remind people of all the great things that are happening at Tesla. I know that Elon says he doesn't care about the stock price, and that's probably true. He's the second wealthiest man in the world, but his staff does, and people who work there do, because their comp is heavily oriented towards stock. And so I think they're trying, I wouldn't call it damage control, but I think when the stock is down this much in such a short period of time, they got to do something. And so usually you see these IR days when either the stock price has really fallen by a lot, or there's something really noteworthy to talk about that, they could fill up a few hours or a day of events just by having senior management talk about different topics. So I applaud them for doing this. I think it's a great idea because they haven't done it in so long. And after this quarter, and again, we don't know how the fourth quarter is going to be, but let's just suppose it's okay, and the volume numbers are just bad, and we can go through them and talk about in detail what you just said, Alexandra, about the inventory and how much is on ships and how much unsold. It's about half and half, just so you know. The whole Megapack story is something that no sell side analyst is talking about. I know some buy side people that are talking about it, but
there we go.
That's a huge potential story if they can get the battery cells to build 10,000 of these things a year, if they can. And even if they can only build 5,000 a year, that's still at $2 million a piece. That's still $10 billion in incremental revenue. So it's a great story, and I think they'll talk about it. I think they'll talk about what they're going to do with all their cash, because they mentioned specifically in the press release
capital allocation.
Yeah. And that's code for what do we do with the cash. And this is cash after all internal needs. So after any gigafactories, after any internal projects like the bot or anything else, what do you do with it? Do you pay down debt, which there isn't any? Do you pay a dividend? Do you buy back stock? Or do you let it build in cash for the inevitable rainy day, which that is not what people want to see. They want to see some commitment that management believes the stock is undervalued. Obviously, Zach does. He's exercising options to buy shares. So I think people want to see that there's some commitment by management to, I don't want to say put a floor in the stock, but at least say, look, we think the stock is very attractive here. And I think a buyback. And it doesn't have to happen right away. Some people were giving me grief the other day, which is fine. I don't mind the grief. That, well, look what would happen if they did the buyback when you and Alexandra were talking about it. They would have paid $200 a share. No, that's not the way buybacks work. Buybacks work over 2 or 3 years, and you keep your firepower. You don't buy it all at once. I mean, very few companies do that. They would buy it, over 3 years would be $3 billion a year. So, I think that's likely, and I don't know if we'll see it after first quarter, but I do believe that you'll actually see it, because I can't believe that they think the stock price is fairly priced at 110 wherever it is today.
No, nobody does. So do you think this will be live streamed, the IR day? It's something that everybody will be. It will be. Did they say that?
If we pull it up, so I actually wanted to read real quick the statement for those that are on listen only.
I want to go. If somebody puts me +1, I want to go.
Elon, if you're watching, 3 people right here. Thank you. And everybody in the comments.
Martin, invite us.
So real quick, for those that are on listen only mode, Tesla announced this date for 2023 Investor Day, and I kind of want to throw my 2 cents in there too, because I read a couple sentences and I'm like, wow, this is kind of actually very interesting. We plan to host Tesla's 2023 Investor Day on March 1st, 2023. The event will be live streamed from our Gigafactory in Texas, with the option for some of our institutional and retail investors to attend in person. Details to follow. Our investors will be able to see our most advanced production line, which to me sounds like Model Y, single piece casting, maybe Cybertruck in there, as well as discuss long-term expansion plans, which to me sounds like gigafactories, maybe master plan part 3, generation 3 platform, which to me is that $25,000, $30,000 car, capital allocation, which is that buyback, and other subjects with our leadership team. So to me, I think it really is. It really is the way I'm reading this is truly a response to some of the fears and some of the concerns and some of the legitimate feedback that Tesla has been getting from its investor base about some of the, like, we're not really sure what's happening here, and the stock's going down, and like we're all kind of like, okay, like we trust Elon, but like what's going on? But I think this is a way to maybe bring focus back into, hey, like for the next few years, check out what we're working on. Like here's the proof. Here's the proof in the pudding. Like we got this. Sorry for the noise, but we got it. So
and sorry, Alexandra. I actually think the 1st of March makes sense in so many ways. first of all, and I'm sure we're getting to the subject of the IRA and the IRS hiccup. So the IRS is now currently having a 2-month period of collecting public input of how they have to reshape the IRA, which will then be republished. The draft will be finalized for the 1st of April. But the 1st of March, we will know what has gone into it, right? So that's 1st of March. Second thing is, as I've pointed out in my Substack, the annual shareholder meeting has been pulled forward to the 16th of May. It's going to be a critical annual shareholder meetings with re-election of Elon, Robin, and 2 other of the board members. Joe, who is a new one, and Hero, who is coming up for his 3-year term to be re-elected. And the proxy for that is going to be sent out on the 15th of March, right? So on the 1st of March, building up shareholder goodwill and making sure everybody is back on board, sees the big picture, understands where Tesla is going, is a critical moment. 2 weeks later, that proxy will come out. Those institutionals will look for those proxy advisors, what they are saying. We need to make sure that we have our 50% ducks in a row. So this 1st of March is really a critical date. I love that they set that date. If Martin is looking, congratulations, because I'm sure you were the one pushing for it. This is a good one. This is very important.
So here, just echoing that. So obviously when the stock goes down this much, you've got big institutions selling shares. And I'm sure they tried calling up Martin or called up Zach, because Zach talks to the big institutions, and complained or questioned or whatever to try to figure out what's going on before they sell their shares. And if they do what they do to me, we say, well, we're in a quiet period, Gary, we can't really talk about it. That just causes them to say, okay, I'll sell and I'll ask questions later. To your point, Elon owns 13.4% of the shares today, and there is a good chance that some activists can show up, and people call me every once in a while and they ask me about the stock, and I know who they are. And if they're activists, they could launch some sort of campaign if they wanted to, whether to force a buyback or to get some directors on the board. And so to your point, if they do something March 1st, it's a way of building goodwill for the remaining shareholders, so that if there is some activist campaign that shows up out there, at least people will feel good about what the company is trying and they're presenting. So I do think the timing is not coincidental. I agree with you that it's in advance of the annual meeting, and again, we don't know if somebody's going to show up with some, we'll call it activist campaign, to try to actually do something, because again, Elon only owns 13.4% of the shares today.
Yeah, the insiders altogether is about 15 now. Kimball, the other board members and all that. So that's not a lot anymore. Retail investors, 42, institutionals now 43. So we're in a situation, if there are a couple of the big investors teaming up, or if those proxy advisors are doing their job, it can get heated, because do remember, lots of the retail investors are not US based, have problems voting. Tesla has put that shareholder platform in place last year in July. It's hardly working. Lots of people are stuck in that received status. Martin, if you're still watching, get us out of that received status. We need to get something. Somebody has to send him this video. This is my 3rd message to him. I mean, it's just, we all want to help, but make it easy for us to help. That's what I'm trying to say.
Well, and Alexandra, you keep track of these proposals that failed, that Tesla has proposed and they've lost. And you don't see big companies lose proposals that much. And so that's why there could be some, again, we'll call it activist risk here.
It is.
They'll launch a campaign, they might get it, it's possible.
Yeah, it is this ESG crowd. They drive me crazy. They're exactly what I don't like about these financial markets these last couple of years. I've written in my Substack, I've given a couple of links. I don't really want to promote them, so I'm not giving that many links of it, because more we show them, more people get ideas, and I certainly don't want to foster those. But there's clearly something underway with these ESG people who think that Tesla is not run the ESG way they want it to be run. I mean, we can talk about this for hours. It's crap, but that's the way it turns. And they do have the support of the State Streets, Vanguards, BlackRocks of this world, who are holding lots of Tesla shares through their index ETFs, which drive me crazy because people don't understand by going into an index ETF that they're giving their voting power away and to these institutions that have so much of it, right? And so if they really want to bundle up, if Larry Fink has the idea that they have to punish Elon, they have very quickly a critical mass. So what happened in 2022 was they would have needed a supermajority to change from a 3-year board of directors terms to a 2-year board of director terms. Why did they want to do it? Because they were now melting down to 8 board of director members, which is obviously not divisible by 3. There were 9 before. 9 were 3 groups of 3-year terms. So every year, 3 of them came up for re-election. I hope I'm explaining this right. So now we're down to 8. So it would have made sense to just go in 2-year terms, 4 times 2 years. It would have needed a supermajority for that. They didn't get the supermajority just because supermajority is very difficult when you start having lots of institutional investors who don't want to do it. And then the third point, so that was 2 of the points they lost. They lost 3 points. The third one is that investors can commingle together 3% of their share count and then have a proxy size big enough to bring anything up to the proxy statement. So they lost that, but then Tesla was clever, I think. I mean, I can't explain it any other way. So that happened at the beginning of August 2022 meeting. And then beginning of October, end of October, they published their Q3 2022 10Q. And down there in page 57, small like that, was announced that they pull forward now the annual shareholder meeting of 2023, not for the August anniversary, but to the 16th of May. That brought forward all the dates where you could bring forward proxy proposals. Now suddenly 22nd of December 2022. So if you think that anybody between the 5th of August and the 22nd of December had the time to get organized again, especially just before Christmas, a year end, whatever, to get new proxies up there, I don't think so. I think the only one who actually jumped on that boat, probably without knowing what he was doing, is Ross, who suddenly declared his candidature for board of directors. Don't you all laugh? Because he just, did this in a moment of big enthusiasm and despair. But I think Tesla was clever. There was a lawyer who was clever thinking this through. And they cut short of lots of that noise, that proxy noise, by pulling it forward. So that's a good thing. But you're right. They're losing a little bit of their fan base who guaranteed them that anything and everything could have been voted for.
Mm-hmm. So a very premeditated measure to really try to passively try and almost like defeat any sort of measure that would come through that could, I don't know, activist group that says Elon no longer CEO of Tesla. And then, so you're really cutting down that time span for somebody to actually be able to pull that together.
ESG people,
Yeah.
these ESG people, I can tell you, they are motivated and they tried already middle of last year. This is the really nasty crowd. And I want to just quickly comment on Leo, because this morning he put out some more heartfelt tweets, and
Leo
I feel sorry
Kogwan
for
is the 3rd largest retail institution.
Exactly,
right?
and I had some very good discussions with Leo over the time, but I think he is now very pained, and that shines through his mails, but his tweets. But one of them today was telling us that Warren Buffett is not investing in Tesla because of the ESG governance mishaps. That is the last reason why Buffett is not investing in Tesla. That's certainly none of his considerations. Warren Buffett knows very well what a setup ESG is. If he wants to go in Tesla, he has many reasons to do or not to do it, but ESG is the last one of those. So let's please not give these ESG people any more platform than they deserve, and certainly not in a positive way. I'm most happy to spend hours of my life again educating everybody what a crap thing this is, but certainly don't believe ESG is the way to go.
So there was a piece that you were talking about prior to this around I think when we're talking about Q1, Q2, and Q3 and thinking about the demand for Tesla, there was the unclear nature of the IRA, the EV tax credit was something that was of potential concern because there are some blurry lines there. And I think maybe Gary, do you think the unclear nature of the IRA and the EV tax credit is going to weigh down, say the Model Y demand in the U.S. and could this be a point of contention that could shine through on the Investor Day or that day on May 16th when everybody's supposed to come together and vote on stuff? How do you think about the impact of the IRA EV tax credit?
So right now it's just huge uncertainty. If you call a couple stores and you ask them about the EV tax credit, they're not allowed to talk about it, from what I could gather. And so, at this point, the 7-seat Model Y would qualify because it's got an $80,000 cap. And contrary to what Tony Sacconaghi, who is the new axe on the stock because he's been right, says, if they were to not reintroduce, but start producing and selling the Model 3 long range again, which they haven't sold since July, if they bring the price down below 55, that would also qualify. And so, there are vehicles that they could sell, but I do think there's just a lot of uncertainty out there. Now, I don't know if other car companies have the same uncertainty. If you walk into a Ford dealership, will they be able to tell you, what the EV credit is on a Mach-E? I don't know. I haven't done that. But I can tell you right now, the people in the Tesla stores are not instructed, or they're instructed not to talk about it, which, again, that's probably the right call until you get some certainty about this. But it may take a couple months to get some certainty. And in the meantime, you're kind of in a situation where people who want to buy an EV may say, well, I'm just going to wait, right? Because I want to get that $7,500 credit. And unlike in China, where they extended the promotional discounts through February 28th, I don't think anything's been extended in the U.S. So it just causes uncertainty. That's the challenge.
I mean, it's a mess. It's a mess, but I do believe it's a mess actually for all car makers. I've been on Tesla's website 3 times a day since the 1st of January, but I also checked others. Nobody seems to know what they're doing. And I mean, we know we're in lawyer America, right? So can you imagine those corporate lawyers telling everybody, just don't say anything until we know? Because if not, the car dealers have this $7,500 liability of anybody saying, you promised me a tax cut, which I may not get, and so then they have to cover for it. So I'm sure the lawyers just tell everybody to shut up. But what gives me comfort is if it's the GMs and Fords having the same pain, because they will see it in weekly sales, right? If suddenly there are less people going to purchase anything because of that, they are going to put a pressure much more than any Tesla investor can, because we know they have the unions and they have the Democratic Party in their back. So I do believe this will resolve not only because of pressure by Tesla investors and Tesla itself. And another good point I want to say, the Twitter purchase, as much as you hate it, Gary, and as much as I love it, this time it actually proved useful because Elon yesterday had a call to the arms and the community responded. I mean, Farzad had done it already 2 days in a row. I don't like this type of PR, but I have to give him, it's quite efficient. He says, please come and do it. And the army goes out, right? And so it has, can you just imagine he wouldn't have Twitter now? And
can I just offer, again, if he was just a follower with 113 million followers, not an owner, he could still do the same thing, correct?
Well, not if he's shadow banned, not if old Twitter doesn't like him anymore. I mean, it does give him a platform. Give him that.
I get that. And look, I see the benefits of Twitter. It's a great platform. It's why a lot of advertisers wish they could advertise on it. A lot of them want to come back. It's why Apple's come back. It's why Amazon's come back. It is a great platform. So you're right. You can use it as a megaphone, and by owning it, he's not going to get banned from it, which I guess is a good thing.
Do you agree? Do you agree that the noise around the Twitter acquisition has come down dramatically here in the last couple of weeks?
It has, and I don't know if Elon's doing it consciously or it's because we're getting close to earnings and we're close to volume. But I definitely notice, it's been driven down for whatever reason. You don't see the noise that you had. And look, as I've said many times, this whole Twitter noise is a temporary issue. It's not something that is going to go on forever. China is a different issue, and hopefully they can fix China and come up with either a cheaper car or some solution that can compete with BYD. But that's a fundamental issue that drives earnings estimates. With Twitter, it doesn't drive any earnings estimates other than if you believe that the brand's been somehow soiled because of all the noise, which I don't. I don't believe that.
Yeah. One of the things that I've been thinking through these last couple of days is I'm watching and again, this is not investment advice, but I would really love to get both of your takes, is that it seems like, a lot of the noise that happened with Twitter, a lot of the craziness around potential brand damage, a lot of the fears around demand, a lot of the fears around earnings, just layer on as many as you want. There's just so much that has been weighing down the stock. And now for the last, it went down 13% yesterday, but it rose up another 5% today. And then before the the production and delivery report, I think it was back up to $120. So it seems like it has rebounded from that bottom of 105 quite nicely. How do you guys think about a potential bottom here? Like, and especially, if you think about the fourth quarter estimated earnings and the 2023 estimated earnings, it puts like you said, Gary, on CNBC, the PE, the price earnings ratio of the company is not 21, which is like, it's the lowest in its history. And what my head goes through, again, none of this is investment advice, but as an investor, what I'm thinking through is like, okay, at what point do value investors say, okay, that kind of makes sense, right? And it's no longer a growth stock only, but it's also a value stock. Gary and then Alexandra, how do you guys think about that?
Mm-hmm.
Yeah, so it feels like 100-ish is kind of where the stock wants to bottom out, and that's when you have the people come in and they just buy it, and that just happens to be about 20 times earnings. And to your point, Farzad, you just see people who have never owned this stock before who are saying, okay, now it's cheap enough, and all the bad news may be in the stock, and they're stepping up because it looks pretty cheap. And again, I can't find, I said this on CNBC today, I can't find a mega cap growth stock. So even if you accept 30% growth, and one of the things that Tesla needs to do at Investor Day or on earnings is reset the expectation. It can't be 50. 50 is too high. So reset it even at 30, which is where the street is. 30% growth for 20 times earnings. You cannot find that type price earnings growth multiple. Not Meta, not Google, not Amazon. There's nothing that. So I think, look, as portfolio managers look for ideas, they ask themselves, okay, do I like the business, especially growth investors? Do I like the business? Am I paying a fair price for it? And is all the bad news, especially for a stock that's falling, in the stock already? And I would argue on all three of those counts, Tesla looks pretty cheap. Could they miss on earnings? Sure, they could, because they took a lot of, we'll call it promotion expense in the fourth quarter. But I do think they have a story, and it's temporary. Again, it'll be explained as, it's a one-time thing. And as long as they don't keep promoting the hell out of the EVs, I think 2023 actually could be a decent year. When you look at where the street is right now, the street's at 515 in earnings for non-GAAP, and then they've got it growing to about 650 next year. So the growth rate is still intact, but it's just a lower growth rate. And so I think one of the things that Tesla could do is reset the growth expectation, stop talking about 50%, talk about something that's realistic and achievable, and then go forward. And that would be better for the stock.
I completely second that, Gary. I mean, on finding the bottom, I really hope so. I mean, I feel a bit ridiculous having said that 160 and now we're 108, right, or 112 again. But I mean, like I always say, nobody has a crystal ball. I wish I wouldn't sit here and try to talk you all. I would just tell you what to do, but that's not what it is. I have 2 points to make here. First of all, on guidance, I think Tesla is too precise or too precise, I don't find a better word, in giving their guidance, right? With these 50%. Now, which 50% it is? What is it? What's the base for the 50%? Yeah, it just invites all these speculations, calculations, and whatever, and then people have this hard limit. So I don't like the multi-year 50%, but I even like less the quarterly guidance, and I like even less the publications of these analyst consensus. I mean, if anybody wants analyst consensus, buy a Bloomberg or subscribe to Gary's, what's your subscriber thing for $5 a month to get your extra information. But
on Twitter.
But don't exactly on Twitter, but don't publish them. What other comic or other company, by the way, does Apple publish any, how many iPhones are sold, how many Macs are sold? They don't. So why does Tesla feel the need to be so involved and at the same time telling us that the share price doesn't count, right? It just doesn't make sense. So to manage the expectations, either give guidance that's achievable and beatable, because it's all psychology, it's all the perspective that people put on it, or just don't do it. Don't give those analyst consensus, and maybe don't even publish those delivered and produce numbers, because there is no obligation to do so. So I really would like them, and I said that already 3 months ago, and I would like to reiterate that. I would like them to revisit whether it's so necessary trying to be so precise, or then explain what you meant with your 50%. Is it based on 2020 line, or is it really reset every quarter, every year? It just at the moment doesn't make sense. It's messy, and it leads to easy FUD saying, oh, they didn't get it because 15,000 cars are somewhere else, right? It's stupid.
Well, and I think they were doing a good job last year of sticking to long-term 50%, and then for some reason, it definitely wasn't being pushed by me or the other analysts. They decided to be more specific for the fourth quarter. So you had Zach say will be just under 50%, and he was clearly talking about for 2022. That's not a long-term guide, just under 50%. And he said we're on track this year. He used the term this year for 50% production growth, and it's just under 50% that got him in trouble. And so I agree with you. I would try to stay away from the quarterly guidance, because it just doesn't do any good. And I would agree that they don't need to be publishing these volume delivery and production, the P&D report. They don't need to do that every month or every quarter. That's they could do it with earnings. They could give it out. It's in the earnings deck anyway. So why
exactly.
have to do it twice? It's not a good use of people's time to have that much information.
And it just hypes up everybody's expectations, and then when you don't have it, you have the result there. So
Can I back to something you said, Alexandra? So back to the fourth quarter numbers. So there were of 71,000 in inventory, and you get that by taking the third quarter numbers they showed in their shareholder deck, and then you take the difference between production and deliveries, which was about 34,000, and you could back into how much inventory they have now. That's about 71,000. And the question is, how much of it is on a boat already pre-sold? And so and you can look at some of Troy's stuff, you can calculate numbers yourself, but it looks to me that there are about 33,000, which was from November, got sent to Europe from China, and about another 7,000 went from China to Europe at the end of December. So that's 40,000. So that leaves you with about 31,000 that's unsold. To your point, that's about 1 week of inventory. And so the question is, is that a big number? Is it a small number? And so I look back last couple of quarters, because we try to track this stuff. It's bigger than what it's been in the past. That 31,000 compares to about 12 in the second quarter, about 20 in the third quarter. And if you go back to fourth quarter of 21, it was about 12.
Well, so you can't just do that. You have to compare it to the total number. I mean, 12 was obviously also weak then, right?
My point is, it's not a bad number. 1 week of
there we go.
Right, I'm on your side. Okay, it's one week of sales, which is, and so you can't look at the 71, which a lot of the sell side is doing. You got to back out what's on a ship or has been delivered. There was a bunch of boats that got delivered on December 25th. About 33,000 got delivered. They didn't make it into deliveries, and then there was another 7,000 that went on a boat December 29th and 30th. So you got to back those out, because those are largely pre-purchased, prepaid, and so the real excess inventory was only about let's call it 31,000, which is not a big number by historic standards.
Exactly. That's what I'm completely agreeing on that. I want to bring up a subject that I didn't even have in my notes, but I got so much heat for the last couple of days, and I actually may get heat from you. I think Tesla should start considering, let's do it. I think Tesla should start considering financing themselves rather than just externalizing that to banks. Now, people tell me, oh my God, the balance sheet, and they're not going to take this on. And I reply, I mean, if there is one car company that has all the data on any driver and can locate the car anywhere in the world if ever it has to be repossessed, it is Tesla, right? So I think they can go into financing actually with a much better data set on the person wanting to be financed, and they can actually, rather than cutting margins on cars, win some percentage points on financing, either by going longer or by just having a more competitive financing structure, and do sales that they couldn't do if they continue relying on third-party financing.
What problem are you trying to solve?
Well, that people that may want to finance their cars currently are having too high monthly payments, and so delay their purchase.
Okay. So again, you can Google this, but you can look at 48-month car loan rates, 60-month car loan rates. They've gone up from the end of October from 5.6, now they're 6.1. And this was in like middle of December. That's when I ran it by. And if you were to figure, okay, you can plug this into your calculator, take a $45,000 loan and vary it 5.6% rate, 6.1% rate. You know how much the monthly payment goes up by? Take a guess.
25
$30.
bucks.
$12. So I don't think they're losing customers, contrary to what some people say, because the loan rates go. And look, 10-year interest rates are coming down again, because people are seeing inflation come down. So I'm not saying it's a bad idea. I'm just saying what problem are you trying to solve? Are you saying, well, the car payments are too high? Yeah, they could subsidize the financing and get the car payments a little lower. That's fair. But I don't think that's what's causing people to not buy cars, I guess. That's my view.
So what is causing people not to buy cars?
Yeah, where does the lack of demand come from if you see it? I don't see it, but
I don't know. I mean, people have been talking about competitors coming in for years, and yeah, there's more competition than ever. Every car company now has 3, 4, 6, 8 EVs. They're advertising them.
they don't
So,
have them. They don't have them for sale.
but China has them, and look, China is, the EV adoption in China is what, 22% now. And Tesla's share has fallen. Tesla's share, was about 15. Now it's down to 8 EV shares. So you could argue that, and again, China is a big market, there is a lot of competition in China. I don't see it in the U.S., and I don't think the brand's been affected by all this noise. So I don't know if it's just, China also had a lot of COVID in the last month, right? So that could have caused everybody's, but BYD's numbers were fine in December. So it's hard for me to argue that it was COVID. In the US, there's just so much uncertainty about the $7,500 credit. It's kind of hard to sort through, the puts and takes on this. Some people say I'm going to wait till January 1st, but then again, there's a $7,500 credit you could get on just about everything if you could take delivery by December 31st. So I don't know if that offset it. I can tell you that the numbers that I saw for China last night, for the last week, were horrible. They were 4.3 thousand, which
For the insurance number, right? For the weekly insurance number.
and again, it could be driven by COVID, which means for the month of December, they were at 48, which means, and again,
That was
just
horrible.
do
Wow.
big picture, they're producing 90,000 a month.
Per month, yeah.
And if you take domestic sales and exports, it's about 75 a month. Okay, so you're 15,000 too much production, even if you take the exports at the current run rate and the domestic sales. So what I don't know is December normal, or is December going to rebound? Because COVID, people aren't, if there's a lot of COVID, people aren't going to take deliveries of cars, and so I definitely give you that. I think what will help China a lot is be able to go directly against BYD, which is gaining a ton of share in that under, we'll call it $25,000 to $30,000 segment. But that's going to take a while because of the Osborne effect and just cannibalization of Model 3. You wouldn't want to announce it until you're closer to launching it, and that's the challenge.
Okay,
Yeah.
so but let me resume that and just state the same in a different way. USA is difficult to evaluate with the IRA. Europe, we're actually gaining market share.
Yep.
Europe is performing extremely well, and I would like to state this so that everybody hears it. And then in China, we may have a temporary issue, which we don't know yet, whether it's COVID related, and once COVID's over, may just come back roaring, or whether we're really losing market share to BYD, but BYD is on a 4% margin business in a much more mass market segment than Tesla is. So the question is, shall we come down into that mass market segment, or do we have enough buyers in the current segment, right?
Right. In Europe, you're right. Europe share has gone, EV share, so share Tesla's units divided by the EV business has gone from 12 to 15 in the last year. In US, just to round it up, it's gone from about 72 down to 64, which again is not that alarming because we knew as more competitors came in, they would lose EV share. and look, the way you have to think about the math is if the EV business is growing, it went from 6.6% in 2021 of all cars to 10% in 2022. That's about 60% growth. So you don't even have to hold your EV share to get to say 35 to 40. You can lose some EV share just doing the math. And so
Yeah.
I agree that this is not such a bad thing because the EV, and it's why
Exactly.
we like Tesla because EV volumes around the world are going to continue to surge. It's just a better product. It's no different than smartphones replacing flip phones back, when Apple brought out its smartphone. And Apple never really gained that much smartphone share versus Samsung, but they gained a lot of overall share. And I think that's the way you have to think about Tesla going forward, that EV adoption is going to continue to soar. We have it gone from 10% in 2022 to 15 this year, led by China. And we have it grown to 35 by 2026. You just do the math. 35 divided by 10, figure out to the fourth power. That's a 37% growth rate. That's a huge tailwind if they could just hold on to their share with Cybertruck, a cheaper car, FSD, any other innovation they can come up with between now and then.
Yeah. Could I add a couple things real quick?
Sure.
If you can bring up that tweet again, producer wife, perfect. So on the topic, we're talking about the topic of demand and Tesla being able to sell into different markets. We're talking about the European market. There's just a few points I want to make here, which I think are interesting and we can talk about too. So this is a chart made by Pololi on Twitter. This is pulled from the European data sets for Tesla sales into Europe. So this is Tesla European sales by month and quarter. The bar all the way to the left is, if my eyes don't fail me, 2019 quarter one. And the bar all the way to the right is quarter four 2022. And each color is the first, second, and third month. So the green is the first month. So if you look at the bar all the way to the right, that's quarter four 2022. So green is October. The orange is November. And the red is December. So this looks to me like a really nice, almost exponential line starting to appear here towards the end. It's probably going to plateau at some point. But so the one thing that I want to bring up here is that there's a couple of things. One, in Europe, Tesla seems to be performing really, really well. And within the context on that same fourth quarter of when Elon bought Twitter, okay, and then he started saying some quite divisive things, especially towards call it the left side of the spectrum that could alienate them. And from some of the conversations I've had with people that live in Europe and stuff, it tends like that a region of the world is a little bit more left leaning. That's to the United States, where this brand damage could actually appear. And instead, the data set that I'm seeing here is quite the opposite. That the quarters actually perform better than any other quarter in the past. So the signal I'm getting here is that the brand damage potential that could have existed, this data set proves to me that it's not the case, I think. Right? I think. Yes. So that's one thing I want to paint. And then the other thing is, and then if you can bring up the link I sent you last, producer wife, that was a perfect. So this is a link that Troy Teslike shared a few weeks ago. So I forget the user's name. I should give him credit. I'm going to give it to producer wife so she can post it. This person collects inventory data in the United States, total new inventory data in the United States for Model S, X, 3, and Y. The dot on the left is November 6, 2022. The dot on the right is January 4th, 2023. And you can see that ever since that incentive started in the, Matt Jung, thank you, producer wife. Matt Jung created this. Thank you, Matt Jung. Right around the peak of the graph is when Tesla started giving that $7,500 tax credit. And the new inventory, if this is correct, which in the past from some of the due diligence I've did is correct, the new inventory in the United States has fallen off a cliff. And the one thing I realized on their website is that they've removed any verbiage around the new tax credit. So this sort of drop that you see, those last three dots on the right, which is for this year, this drop would have existed without any verbiage around that $7,500 tax credit, which to me says demand looks really healthy for Tesla vehicles in the US. So when you look at these data sets and, we think about China and, Tesla right now, like you said, Gary, doesn't have that robo-taxi, doesn't have that $25,000, $30,000 car, but it seems like there's going to be a market for the Model 3 and for the Model Y. They're completely different sort of brackets, right? Price brackets. Is demand even a concern? Should it be a concern moving forward now that we have these data sets, or is it too early to tell?
I would love to see some data, and I'm going to be, you know, I would be surprised if the brand has taken any hits. Again, net promoter scores is the standard. People look at those, and again, you ask people, would you recommend your Tesla to a friend or a family member? And a 9 to 10 gets a +1, a 6 and below gets a -1, 7 and 8 is ignored, and it can range from -100 to +100. I know there's a lot of people don't like them, but it's what the industry uses to figure out if the brand's been impacted. I would like to see it, and I'm sure Tesla has the data somewhere, so that would be helpful. Second, I agree with your points, and I agree with your graphs. I don't believe that Tesla's brand's been impacted, and the Europe data would prove that, or at least it's one data point. The China numbers, it's just hard to know because COVID was raging for the last 4 or 5 weeks, but it didn't affect BYD. But BYD could have gained even more, volume for all I know. So I'm willing to give it a pass and say, look, I would say it's unknown, and I have a new phrase which I used today. I think all this noise is affecting the stock price, but it's not affecting the business. And
Yeah,
I think that's where we are today. But
Put it on a shirt.
yeah,
exactly. Sell a T-shirt.
I could be proven wrong on this, and I would love to see some market research data from somebody.
And I want to ask you both, what do you think of price elasticity for Teslas? Let's just not think about the IRA for the moment, just because it's so unknown what's happening. Given that Tesla increased the prices so heavily during COVID, right? And I mean, it's wonderful to have seen 30% operating margins, but that's obviously not the norm, and that's not going to be sustainable for long term. But I have the feeling as soon as they give a little bit back in price, there is immediately respondents. And I want to congratulate all those that took second half of December opportunity, because given the mess now with the IRA, they were clever to take the 7,500 up front, right? That was the best deal in town.
Dime.
Right? Yeah. And that was on our dime, but that was the best deal. That was the best deal in town. Go ahead on price elasticity, please.
I think there's definitely a good price elasticity, to your point. I think if you reduce the price by even 5%, you're going to get immediate volume impact. But I would say this, and this is what the bears say. The bears say, even despite all that promotional activity in China and the U.S. in the fourth quarter in December, last of December, they still barely beat 400,000 as a delivery number. And there's some merit in that. And again, we can lay out all these factors of why that happened, but I can't tell you with 100% certainty that there's not a demand issue, right? It feels like something is going on, but I can't tell you whether it's COVID. I can't tell you whether it's all the competition. I can't tell you whether there's some brand impact. It just feels like the brand has not been impacted by all the noise, but the stock price clearly has, right? So I'm giving you, I don't know as an answer.
Okay.
Yeah. So a little secret. I don't know if you guys knew this. Before my Tesla gig, I was in charge of the pricing strategy for a $1.2 billion distributor of pet food and supplies. So this is this is right within my wheelhouse, kind of. But it's been a minute. It's been over 5 years. So this is probably a bunch of BS I'm about to give you. To me, it seems like the last couple weeks of the Tesla incentive in the US, I think to me was proof that the price elasticity exists. And as soon as they want to unlock demand, all they have to do is drop the price and you're set, at least in the US market. And if I look at the data set that we just showed from the European market, it seems like they're already priced pretty well. They had a record quarter in Europe, and it doesn't seem like it needs any help. And especially thinking about Europe and how they're a little bit more pro EV. They have a better infrastructure. People are more willing to buy those vehicles. Yeah. Right.
Yeah.
Model Y is performing extremely well in Germany. Mm-hmm. I think Model Y is going to be a big time surprise for a lot of the European market because of the form factor it provides and the sort of solutions that it solves for. So I think I think what and the China thing again, I think I'm with Gary. I just don't know the market. I don't have any contacts in China. I've never been to China. It's culturally is very different. I do agree that the competition's much stiffer, but at the same time, they have the largest car market in the world. And if the problem is, well, there's not enough people to buy the Model Y and the Model 3, even at say bottom dollar prices where Tesla says 5% margin, which would put them quite like the Model 3 at the lowest range if they decide to sell at the same margin as the BYD, like say lowest competitor. I mean, they wouldn't be that far away. So like the pricing power is there for them to unlock that demand. So everything's there for them to just push a bunch of units into the market. And so for me, demand is just a simple equation is you want more demand, lower the price. How much margin do you have? Almost 30. Okay, cool. Lower it. Big deal. Like to me, it's not a huge deal. And then over time, I think if they can create that continued separation from a product perspective where the Model 3 and the Model Y are clearly the best product out there, similar to say the way I view an iPhone versus an Android. Sorry, Android folks, I just feel like the Apple phone is significantly better. Okay, then if that perceived separation is there, I think Tesla is going to continue to really leverage their pricing power and say, okay, we're just selling it we're capacity constrained and we're selling as much as we can. And if we literally lower the price any more than now, we're going to have years of backlog, so we can't. So as long as that's the equation that keeps going forward, I don't see a problem. And that relies on product excellence, which given now that they're, setting up that March 1st thing that says, hey, come on down to Giga Texas and check out all the awesome core engineering technical challenges that has allowed us to have 17%, 18% operating income percent and potentially more into the future. It's because of the product, and come check it out. If that continues, it's not a problem. It's not a problem whatsoever. It's just, I think Gary's statement is perfect. It's perfect. It's the noise is impacting the stock, but it's not impacting the company. And I think ultimately that's my biggest takeaway. And it applies to price and elasticity. Yeah.
Now we're back to the first. Go ahead.
What we don't know is how much of a price reduction do you need to get the momentum going again. And again, in the U.S. it was 15%. If you take 7,500 divided by an average selling price of, let's call it 52, that's 15%. That's a
well, 7,500. 7,500 was because the IRA was 7,500. I don't think they would have ever come up with 7,500 if the IRA wasn't at the door.
Exactly.
That's fair. But again, with the IRA, it's such an uncertain concept today. With because you don't have other than the 7-seat Model Y, and you'd have to produce the Model 3 long range again, and you'd have to lower the price a little bit. Those are the only things that would qualify right now.
Well, I mean, there are a couple of things I want to add here. I actually wanted to walk to Tom Chu, but I'll get there. First of all, I think cost of goods sold is getting down. Elon mentioned that the supplies are going down. It takes about 3 to 6 months to filter into the factory inventory prices, right? And so I think we're going to see that soon, that we have a lower cost of goods sold. The other thing is the Model 3 obviously gets a revamp, so I expect this to be castings. And so much cheaper, but a much more efficient way of producing and lower prices. So between supply getting cheaper and Model 3 production getting cheaper, I think they can actually lower the price yet hold steady the margin. So that's the first thing. The second thing I wanted to move on is, do you think they will present us officially Tom Chu on the 1st of March? Do you think there is going to be some... I want to fall in love with the man, I said already. I mean, not with the man, but with the persona.
I think he's being set up, to be the clear number 2, the old Jerome role that, didn't work out in the end. And look, he's got a reputation being a workaholic, being very smart, technologically. I think he's got all the skills from what I can tell. And the fact that he's now being brought over to the U.S. to run sales and marketing and not just, a plant, I think that's a great sign. And most investors will like it. And if he gets, quote unquote, introduced, as the clear number 2 to Elon, as long as people don't think Elon's going anywhere, I think that will be viewed as a huge positive, because then you got somebody, like a Tim Cook, who can run the company if Elon gets hit by the proverbial bus. And I think it would be a disaster, just to make myself clear, if Elon were to leave Tesla. Institutions would hate it, because Elon is the passion, he's the drive, he's the fire behind Tesla. and he needs to stay, and he needs to be 100% engaged to the extent that he can, given it, he still has his other companies, obviously. So I would much prefer that Elon stays as CEO of Tesla, has a strong number two in Tom Zhu, and find somebody really credible who he can work with, who can run Twitter, who he trusts.
Yeah.
Yeah.
Well, that's hopefully soon on the agenda.
If I could plug something real quick, producer wife, I just sent you a link to a YouTube video. This one might be interesting for people that want to learn more about Tom Zhu, I think it's pronounced,
Zhu,
if I remember
Zhu.
correctly. Come on, Gary,
Yeah.
get it right. Jeez, I'm kidding.
We're gonna learn it. I'm me between Giga
I'm
and
kidding.
Giga and Zhu and
So if you pull up the video there, producer wife. So Matt Smith and Emmett Peppers from Good Soul interviewed a former Tesla China employee who worked with Tom.
on PR,
allegedly on
Yeah,
PR and
on
communications. Yes, and I say allegedly because I can't confirm, but I trust these guys, so I'm sure they're right. But I would recommend you guys check out this video. I'll have producer wife link it in the comments section. Yeah, it's actually the second link. Producer wife is not the first one. Yeah, so it's going to be very. I would recommend everybody watch that because I think it gives a lot of insight into the kind of person Tom is and the sort of value that he could bring to the Tesla story. I do think it's a very obvious and thank you for pulling that up, producer wife. I think it's going to be. He's going to be a great global leader of automotive, I believe. I think.
Yeah, very devoted, right?
Yeah, very devoted. He's been at Tesla for, I think, almost 8 years now. He was in charge of leading the Tesla Shanghai effort, which to this day is Tesla's crown jewel when it comes to production, especially as Austin and Berlin are still ramping. Those two facilities could at some point be more efficient than Shanghai, but I don't know. I mean, China does have a very specific work culture that is very complementary to Tesla's work culture as well. So, and now I think him being in charge potentially of all these gigafactories is going to be awesome. It's going to be awesome for Tesla. It's going to be awesome for Tesla's long-term growth. And if they can be as efficient and as quick as they have been in Shanghai and places like Berlin and Austin, that's great. It's great, and that's what I would expect under Tom's leadership because I think he has a track record of doing that in Shanghai.
Yeah, and I would like to add the ones watching the very good interview of Emmett and Matt with the Chinese person should also watch. There is a YouTube video, and I can link it in my Twitter feed later, of Tom Chu being interviewed in Chinese, but they put English subtitles in the comments below. I've hardly seen somebody as passionate about a production line. I mean, you understand where I come from. I have no idea how to produce a car, and I'm watching in Chinese a YouTube video with Chinese subtitles, but then English comments in the below comments, and having to match it all together. And I was glued to the screen just because he is so passionate about what he's doing, how he organized those shifts, how he organized those people, how he promotes people and whatever. Again, all in Chinese, but it comes over, especially for Asian people who usually are more reserved than us Western people. It comes really over as somebody who is very, very devoted and passionate about what he's doing.
The other thing I would say, in China, they've used PR very effectively to handle, to go after the FUD. And so hopefully, they can, if he's going to run sales and marketing in the U.S., they may see that here too, which would be helpful, I think, to combat some of the FUD out there.
Yeah,
completely
on
agree.
that same interview, they talked about that specific scenario too, where it was when that lady went on the Model S and that show, and then was saying, Tesla makes like the brakes fail or something, and turned out to be a hoax. They talk about how Tom led this effort to just fix the problems they were seeing, and it worked. The fix worked. So that's very promising for maybe that's the signal that says, hey, we might start these efforts globally. It's not just going to be a China thing. It's going to be a global
and
thing.
You look, and the investment
look at how happy
in the investor day. Exactly. I'm like, whoo. There we go. Oh, continuing on the happy theme. I got today an email from Gary. You see, every time I get an email from you, Gary, how happy I am. Introducing that you're looking for investors into your company that's doing the asset management. You want to talk about that a little bit?
Sure. So we're going to be opening up to outside capital for Future Fund. We're trying to launch a Future Fund long short product and a hedge product. So it's really to grow the business. And so we'll be sending out, if you haven't received one, you'll be getting one shortly, emails that talk about our private placement. We're trying to raise between up to $5 million, and we're willing to give up, a certain percentage of the company, I think up to 33%. And so we're going to do a conference call next week to talk about it, and hopefully people would be willing to participate. We think it's a great opportunity because not just about Tesla, but with interest rates potentially coming down next year, growth stocks, which is what we own, should do very well as soon as the Fed pivots. As long as we don't go into a deep recession, this might be the great time to buy, growth stocks, and we think it's a good opportunity to be investing in a firm that's all we do. So look for that. Hopefully, it's in your email in the next couple of days.
Thank you very much. Go a little bit lower, Cindy, because there's a picture of me. Let me show you because you see there's Ross, and there I am. Here I am because Gary asked me to be on his advisory board, and I accepted that last month. So there I am. So now if I become an investor, can I really boss you around, Gary? That's the whole question.
Yes, you can. You're on our advisory board. It'll be the closest you and Ross will ever get together. Put you on the board. We just thought
That's actually true.
Interesting to watch the two of you duke it out.
That's hilarious.
That's actually true. That's probably the closest I will ever get to Ross. That was funny.
And for people that are looking to invest with your fund, ticker FFND, correct, Gary?
Yeah, but it's a private placement to basically invest in the firm itself. So it's really to help us expand. And the next steps are we have FFLS, which is going to be a long short product, and we have a hedge product coming out. And it's really so we can hire more salesperson. We don't have any salespeople, and get more infrastructure in place so we can take us to the next level of growth. Our goal is to get to be about $1 billion over the next 5 years in AUM. Today we're about 40 something, and that's the future fund plus separate accounts. And at $1 billion, we estimate we could earn about $7.5 million in profit. So you can put whatever multiple you want on that, discount it back. And so the implicit valuation on this is about $10 million if you go through all the math. 15 million post money. So we think it's a good opportunity for people. We're doing it at a time where growth's been beaten up. The Fed is about to pivot. So we think it's a pretty exciting time to be investing in a business like this. I do want to bring up one other thing that we didn't talk about, which is just the mega packs, which I wanted to talk about on CNBC today, but they cut me off.
Sorry, we ran out of time. Thank you. I'm just kidding. Go ahead.
but you go.
It is
I had to.
Catalyst, and look, I was slow to come around, but the sell side is not talking about mega packs. And so Lathrop came on. I've done a bunch of research, in the last couple of weeks, just trying to get up to speed on it. And many of you are way ahead of me on this, and thank you for helping me understand it. But if we really have Lathrop can have capacity of 10,000 units per year, and these things sell for $2 million each, and they're really backup energy storage sources. Everybody, for peak hours wants that backup energy, and a lot of people want something that's more sustainable. The wait time to get one of these is not till 2024. So if
late 2024.
Right. So if Lathrop can do even 5,000 per year, and a lot of it's based on can they get the batteries needed to produce 5 or 10,000 units. 5,000 units at $2 million each is $10 billion. There's a lot of debate what kind of gross margin is going to be on this. I just assumed a more conservative 20%. There are people using numbers like 60%. I don't know. But even if it's 20%, that adds incrementally 50 cents to $1 per share in earnings. And you're also going to get some tax credits as a result of this. So
exactly
50 cents to $1 in earnings when we're only looking for, we're now at 570, our new number for 2023.
Yeah, and Wall Street much lower.
And the street's at 515. That could be a huge surprise, and nobody is talking about it. There's a bunch of buy-side people talking about it, but very few people on the sell side are talking about it. So that could be a real positive surprise.
What are the chances?
I am so happy to hear you say this. You have no idea. It's been 3 weeks of getting
this
you
is
there.
almost a signal. If Gary Black's on the mega pack train, look out, right? It's one like one of those things that's very exciting.
Better late
than never. And let's now see your impact, because you'll see once you talk about it, it will filter through. Let's just watch it happen.
Talk about it on CNBC, but they just literally ran out of time. I said, ask me about the mega pack, and Carl didn't ask me about it, and then I wanted to talk about it, and they just couldn't do it. So that's fine. Next time.
Can you X out that little thing on the right there, Cindy, babe? producer wife. So many names.
Hey,
Yeah. So this is the.
do you call her producer wife in all your activities, like eating,
Yeah, I do.
like that?
Everything. When we go shopping, producer wife, I need your help picking out the sauce. It just started this one day. You know, she's a little camera shy. You know, she likes to stay behind the scenes. So I'm like, I'm just gonna call her producer wife, and it just stuck. And then my favorite is when people in the comment section are like, "You're such a misogynist." I'm like, she's literally my producer and my wife. Like, what do you want me to say, bro? Like, literally, those are the two names.
Her name is Cindy.
Her name's Cindy. She's the most beautiful person I've ever met, both inside and out.
She is.
Yeah.
Well,
Yeah. So this is the Mega Pack product for those that are not familiar. Yeah. So let me ask you this, Gary. What are the chances that this is the trigger in Q4 earnings that could be a surprise? Because like when I think about what are the things that could surprise in Q4, there's not a lot. 405,000 deliveries. Doesn't seem like there's any room for surprise there, especially when they're dropping prices in the US for the last couple of weeks. You got the China incentives. You got that full self-driving one-time impact from the deferred revenue, but everybody's going to back that out like we talked about, right? But like really the only thing there is energy. So how big of an impact could there be? Like a 50%, 100% growth quarter over quarter because of that Lathrop? By the way, kudos for pronouncing Lathrop correctly. I've heard so many people calling it something else, and I'm like, it's Lathrop. How do you think about that? How do you think about Q4 impact with energy?
I don't see it impacting Q4. I mean, it really just came online at the end of third quarter, and it's a new factory. You're going to have startup issues, and so you could have some, I don't know, make up a number, 1,000 of these units produced, maybe, but I'd be making it up. And from a profitability standpoint, I don't know if it's going to add much. I don't want to set the expectations out there that it's going to happen in fourth quarter, but I do think it's going to be something they'll talk about on the earnings call. When they came up with their 20 accomplishments for 2022, this was one of them, and it was with a bunch of other really big accomplishments. So I think you'll hear a lot more about it during Investor Day, and I think that's when the sell side will pick up on it and start. It doesn't take a lot to do the math. If you have 10,000 units of capacity, even if you did 5,000 at $2 million a pop, it's a huge number. And
it is.
I think that's where the sell side will get excited about it.
And I actually expect another factory for that. I don't know whether it's going to be in the United States or in China, because yesterday we saw a report how eager China is to have more mega packs. So I expect that they're going to announce not only a car gigafactory, but also a second factory now for the mega packs.
Look, I mean, it fits with the brand, it fits with the vision, it fits with the whole accelerate sustainable energy. But there's a very practical purpose when you're talking to utilities and communities and even companies that want to be green. It's a perfect product for Tesla if they can just outdistance the competition on it.
Yeah. The way I think about it is the grid, the energy grid for most countries is a hot mess, and it's extremely inefficient. And if you can introduce a product that's going to lower the cost of a utility, lower the cost to the consumer, make it much more reliable, and because it's such a hot mess, you can keep a lot of that profit to yourself because of that crazy gap between the product you're offering right now and the mess that it is. This seems like the perfect time for Tesla to be like, okay, check this out. Nobody talked about this before. Boom. All of a sudden you're entering a potential $1 trillion industry in 5 to 10 years. And you think about what are the moving pieces in a mega pack compared to a Tesla car. It's probably one half to one fifth of the moving of the parts that take up a mega pack. You think about the EV versus the gas car. You had this crazy reduction in parts, and now you go from the electric car to the mega pack, which if you have even similar margins, the mega pack is a no-brainer product for you because it takes a fraction of the labor and the processes and the steps to manufacture these things. You don't have to deal with brakes. You don't got to deal with wheels. You don't got to deal with all these little auxiliary things. You don't got to worry about a trim that doesn't rattle when you're driving it around. It's just a box. What the hell?
And much more recession resistance. The entities purchasing this have nothing to do with real economy. So that is really a product that will perform no matter the economic climate.
Exactly.
So I'll talk more about it. Hopefully, on Investor Day, they'll talk about it. And people will get excited about it, and it's going to be another catalyst that everybody's going to focus on.
Move it up in your catalyst list. Higher up, higher up.
Number one.
There we go.
Yeah. We got about 10 minutes left. Do you guys want to hit anything before we hit Q&A, or should we go straight into Q&A?
No, I just want to say thank you, Cindy, to Cindy for having taken off that film of the Megapacks. I have a huge problem in my life, which is I'm really scared of heights, right? And that video showing all those Megapacks. So I was sweating my way through here. I was like, take it off. And now I'm back in normal. Thank you. No, you for
It's
nothing.
not real. It's not real. Don't worry. You're good.
I know. I was in there. Let's go to the questions. I'm all relaxed again.
Yeah,
Gary, did you have anything?
Which I even hate to bring up, but I will because that's my role. This guy who tried to commit murder-suicide, with his family, and the car, the kids got minor scratches, and the two adults were critical, but they lived. I don't know if in any other car people would have lived a 250-foot plunge. I just find that amazing, and it's not great PR, but it is good PR when you think about it.
Oh, it's great PR. I'm sorry, I don't agree that it's not great PR. I mean, first of all, especially America seems to be glued to these stories, right? Honestly, in Europe, you hear this story once and then people just think how dark it is and they don't talk about it anymore. In America now, we will hear the guy going to prison and the wife doing her whatever and the kids doing so this will be going on. The pictures were spectacular, for all these people that love to watch accidents and blood. Here they've got it. Then the pure result, because initially they thought all 4 people were in intensive care. The children walked away. The children had nothing. This is absolutely, nothing. You talk about the psychological damage, but they had nothing in terms of scratches and injuries. So the Tesla brand is out there in the best possible way. I don't like this story, but the drama that's added to it and the addiction of the Americans to go into these drama stories can't be better PR than that. This is real life. Your Tesla saved your life.
Yeah, it's unbelievable. 250-foot cliff.
Drive.
You see my height.
Yeah,
Shoot.
I was glad she didn't make it like full screen because you might have started like passing out. And then there's one. Sorry, go ahead, Gary. Go ahead.
No, everybody knows Tesla for its range. People know its performance. 0 to 60 in 3 seconds. People fawn over the technology, but safety is where it's all going, and especially as FSD and self-driving becomes really important. Anything that Tesla can do to talk about its safety is enhancing. And so this, without spending a dime on advertising, and again, I wouldn't wish this on anybody, but it's really going to help that safety brand because it just shows that Tesla builds a really high quality, safe car.
They really do.
It does. Yeah.
Let me cover just something for 30 seconds and then we'll do Q&A real quick. Producer wife /Cindy/babe. Real quick, I don't know if you guys want to give your quick thoughts on this. So there was Tesla filed an application for a trademark on 12/28/22 for the following: asynchronous motors not for land vehicles, motors for airplanes, motors, namely synchronous motors not for land vehicles, permanent magnet motors, boat motors. So it looks like they're starting to set the stage for the next generation of products. What do you guys think about that?
Now, first thing is, this is a trademark, right? This is the name protected, meaning now for these type of motors or for these type of products, Tesla has a trademark or will have a trademark because this takes about 6 to 12 months. That's protected the same way that it's currently already protected for cars and Megapacks and whatever. So this is not yet a patent or anything, technical. It's a very good beginning. I love it. I love the idea. I think it brings a lot of fantasy. I also think it's not a coincidence. I think this is all building up to the 1st of March and what we're going to announce. I love the idea, but let's not speculate too much at the moment. It's just making sure in that niche, the name Tesla, the name is going to be protected.
I was about to add $5 of EPS in Q3 for this. I'm just kidding. Go ahead. Gary's like, you son of a bitch. You were going to start, weren't you? Go ahead, Gary.
Look, I think it's a good thing, as you say, expanding the brand, but I won't be adding anything to my price target yet.
Yeah, awesome. Yeah, I'm excited to see it. I mean, this is right in direct thing with Master Plan Part 3, and Elon has talked about teasing it. To me, that March 1st, it's to me, the more I think about it, the more it feels like it's probably going to be the biggest product announcement place for Tesla in a long time, because I really think they have an opportunity to start laying out some things, but I don't want to hype it up too much, so I'm just going to shut up there. All right, let's do some Q&A real quick. I know producer wife and I have a hard cutoff in 9 minutes, so we'll try to get through as many as we can. Go ahead, producer wife, hit us with some light jazz or some light lo-fi, and let's do some Q&A. Ray Johnson, thank you very much for the $5 Australian super chat. How many new factories will be announced, and when, in your opinions? Who wants to take this one first?
Well, they're going to have to start announcing some soon, because if they want to get to I have 10 million units by 2030. We're at 2 million plus of capacity. You need at least another 10 or so gigafactories. I would expect we'll see 2 of them announced this year in 2023, and probably one in the first quarter in North America.
Yeah. I agree on the 2. I also think they actually like to have 2 at the same time. Remember, they did Austin and Berlin simultaneously. And I would like to add to that at least 1 to supplement Lathrop. I think there's going to be another one for Megapacks, maybe even 2 with China.
Okay. Next question. Ray Johnson, thank you very much. $10 Australian super chat. For Gary, could Tesla sell the software for battery storage for a monthly fee to non-Tesla battery packs, and what value could be added to the cap? So this is probably the auto bidder technology that Tesla's working on. What do you think about that, Gary?
Yeah, I don't know the answer to that. I'm sure they could sell it that way, but again, to me, it's premature to put that type of a, recurring earnings stream into my model at this point. But yeah, they could do it. I don't know. Okay. What do you think?
Yeah, I don't know yet how profitable Autobidder is. And I have in memory that about 2 years ago, Elon always said, if we do Autobidder, it's going to stay within Tesla. That's what we are doing. It's not going to be rolled out to customers for them to use it. I don't know whether that has evolved or not. I really don't. We really need more information on the energy side.
Yeah. Look, when I build a model, I want to have some certainty. I'm not going to have to take it out of my model down the road, because it just didn't happen. And even things with Cybertruck, I put it in very early, and it's been 4 years of delays, and hopefully it comes this year, so I don't have to take it out of my model for 2023.
Yeah, I think Tesla has a legitimate chance in the next 5 to 10 years to start building in some significant SaaS earnings through FSD and Autobidder in the same way that Amazon did Amazon Web Services. So I think once that comes to fruition, that could be a very positive upside for the stock long term. Next one. Herman, thank you very much. When do you think Tesla will go into markets in Africa, India, and South America? Alexandra and then Gary, what do you guys think?
Well, as soon as they have enough cars to sell there. One of the issues obviously was, and I think India, there's still an issue with the import tax. Remember, there was this question, will they have to build a factory to lower that duty to get into the market? But South America and Africa, I don't see any issues. Africa is obviously a question, do you have the clients, the client base for these prices yet? And already South America, you certainly do. I think there's still quite a lot of markets to be conquered. You see how quickly they entered into Israel once they knew there was the year-end incentive getting to an end, and they just fill those. That's the advantage of having Shanghai producing so much. Once you enter into those markets, you can actually fill them very quickly. Australia is another good example.
Yeah, I think South America first. India, I was more positive on, then I started doing some work on it, and the average vehicle in India is just so low. It's hard to see how Tesla can make money in it. But South America, there's a lot of wealthy people who would buy Teslas, and you could ship them right from the United States. So I think South America is relative.
Exactly. Or Mexico, once you have a Giga in Mexico, who knows?
Yeah. I think Cybertruck could be a surprise in Africa and South America, and I think the cheaper car will do great in India. Yeah, I think Cybertruck's going to sell a lot more than a lot of analysts think. I think it's a 1 million unit a year car.
Certainly more than in Europe. I don't see it in Europe.
No, it's too big. But capacity, I don't know what Giga Texas could make. There's numbers all over the place. But could it make 250,000 a year? Maybe. But they'll need another factory.
Yeah, they have a lot of land there, though. They can probably do 4 or 5 gigafactories on the same land, but So it's going to be interesting to see how they build that out. Let's do a couple more. Thank you very much, Franamo3. Question: I read that BYD's sold count includes cars sold to dealerships. Do we have any stats that show the inventory of dealerships? Maybe dealership inventory balloon in that same time period. Gary, maybe this one's for you because you know BYD a little bit better.
I don't have it. They do include dealer inventory. It's a normal car company, but I don't have it broken out. Just non-dealer sales versus dealer sales.
I think the better numbers are actually insurance numbers, and I mean they are good in insurance numbers. Again, it's a low margin business they're doing. They're growing. I want to see how actually they can sustain themselves exporting to Europe with this margin model. I don't see it yet, but we'll see. And to get around this dealership yes or no question, look at the insured cars in China. That's probably the best indicator you can get. Because no dealer is going to insure them before he has to do it.
Very true. Next one. Chris, will Tesla, I hope that's your first name and your last name, Chris. Will Tesla get another car company to adopt their full self-driving? Alexandra and Gary, what do you guys think?
I do believe so. I just can't see any of the competitors getting there first. I mean, who knows? Maybe the Chinese do. Maybe Waymo goes. I do believe lots of the car companies, the OEMs, would prefer anything but Tesla. But once the software is clearly the winner, especially in security and in comfort, and I just do believe that's going to come, they will adopt it. It will be a question of survival. If you have the Tesla Insight with all the advantages it will have by then, I do believe they will license it.
FSD is clearly a driver assist product right now, and there's rumors that they will introduce a high-def radar as an addition to the hardware package they have today. I actually have thought this for a while, where there'll be two FSDs, one which will be more expensive, which will be capable of driving itself, true level 4 autonomy, and one that's kind of where we are today, we'll call it level 2.5, where the driver has to stay awake, in control, and it just uses a driver assist package. And I think for driver assist, there definitely could be some, some royalty flow or some income that comes in, but I can't see it being $15,000 a package for just a driver assist package. It just seems like a lot. Now, could they get to level 4 with the vision only package? They could, but it just seems like it keeps getting pushed back further and further. And if it's true that they're actually going to introduce reintroduce radar, high definition radar, that may take a while. So I do think you could see a two-tier market, just like you've seen with other car components, stereos, and ceramic wheels and things like that. You could see a two-tier level of autonomy as well, driver assist and fully autonomous. And I wouldn't surprise me if we saw that down the road.
Yeah. If you don't mind, Cindy, can you pull up the comment from Jeffrey at 258 about how much BYD would have to do to be comparable to Tesla? I found that very compelling. I mean, I love Jeff anyway. I know you know him, Gary. Yep. I just think he's somebody who's worked on the supply chain, who knows a lot more than anybody that I know, and I'm learning a lot from him. So Tesla ships 50% more battery electric vehicles than BYD at 8 times the profit per car. So BYD, to just be equal, would need to ship 7.3 million cars to equate the profit that Tesla is currently making on 1.3 million cars produced per year. So that puts it in relation. I mean, we all look at BYD as a shiny object, but they've got a way to go before they have the profit margins that Tesla has. And maybe they don't need them. If you have the support of the Chinese government, maybe you don't need to compete with Tesla, but just in our terms, in stock market terms, that's what counts.
Although again, when you're investing in a stock, you need to see unanticipated change. So if BYD can double their margins from, let's call it 4 to 8, and people are expecting them to go to 5, the stock's going to go up, right? They don't have to get
sure. Manage your expectations. Have somebody who communicates like that. There we are. Last question, so that you're on time. I'm sorry that we're keeping you so
actually,
much.
No, we're going to have to wrap that up. Yeah, unfortunately, that's going to be the last one here. We got to go. But thank you very much, both of you. I'm going to give you guys the last word. Alexander and then Gary, last word, and then we'll sign the sucker off. Go for it.
Well, thank you very much for doing this. I thought that was important. Just talk it through calmly. There is no big crisis around. This may be good moments to get into the stock again. Let's all look forward to the 1st of March and then to the 16th of May for the shareholder meeting.
And I would say ignore the noise. The noise is affecting the stock, but not the business.
Put it on. Oh, sure.
T-shirt.
Come on now.
Bye,
You
guys.
enjoy your vacation, Gary. Come back soon.
Thank you, everybody. Thank you, Alexandra.
Take
Thank you,
care.
Gary. Thank you, producer wife. Thank you, everybody in the comments for keeping it respectful. We'll see you in the next one.
Yes.
Take it easy, everybody.
Bye-bye.
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 And